checked my phone. I was like, whoa, what on earth? And it had wiped out big time. It was on news, so there was slippage. And I was like, the worst trade of my career. It just sticks out to me because I was on holiday at the time. So I shouldn't have been trading.
I did not start journaling until Kieran sat me down one day and said, Mad, you're a fucking good trader, but what the fuck are you doing?
Yeah. Well, how are you going to improve something if you're not tracking it? You're just throwing shit at a wall and hoping it sticks, right? For example, you might find on a Friday that you trade awful because you went out on a Thursday night and you might find a pattern in that, but you're only going to know if you track it.
The journal, mates.
And you, journal.
Yeah,
journal.
Everything.
Journal your life.
Stop idolising people who, you know, are in a completely different situation, because when push comes to shove, they're not going to save you. If you're constantly building everything based on somebody else's career, you're never going to be able to detach and let go.
Yeah.
When you're trying to decide whether you should get into a trade or get out of a trade, you can't just ring up your favourite influencer and say, should I take this trade? Like, you've got to ultimately decide that for yourself.
Welcome back, guys. We are still here with Kieran, and I need to get back into this conversation because I'm really excited for what Kieran's going to say. So let's get straight into it.
So essentially I took all the data and just kind of built my own data matrix, which does my sort of decision making for me before I've even looked at a chart. So what I'm doing for that day on an intraday basis is not decided for me, because I'll have to look at it and, you know, have we done X, Y, Z, and then I'll plug it into my matrix. But that spits out kind of a number which is a score out of 100, but realistically it's never going to go above 75 probably, which is a little bit weird to say it's out of 100, but it's not going to go above 75. And the reason for that is because it's all probability based on an individual level. So for example, I look at previous week high and low, if that's been broken, previous day high or low, if it's been broken, Asian range high or low, if it's been broken. Then I look at session gap fills and session correlation. And that's going to sound like
I was going to say,
random
most people
stuff.
at home are going to be like, what?
Yeah, it's going to sound like random stuff, but when I framework it into, has it been done? Yes, okay, spits out a score which has got a different weight into the matrix as a whole. At the end, it combines all the statistics together. So let's say each one is a 70% probability of continuing in, you know, the direction I want it to go. Even though everyone is pointing to the same thing, they're all still only a probability. So it's never going to be 100% or 90%, but that would equate to a 70% overall. Whereas when you start looking at 55%, 70%, 90%, 30%, you might get a number of like 56.5, which doesn't sound great, but actually my cutoff is 50. Anything above 50 has enough weight in it through what I've tested to warrant taking a trade. Then I'll just look at it and be like, where's the clearest sign? And to quote Tom, is where the most people fucked is basically what you look for. Where's the pain points of traders on the chart, i.e. swing points. Everybody knows people put stops above swing highs and swing lows, or inverse levels. And again, the psychology behind it, if somebody's bought a level and they go underwater for a couple of weeks, we're not talking you or me, we're talking investment bankers, like trading desks, hedge funds. If they're underwater for a couple of weeks and they've seen their P&L go, you know, negative big money for a couple of weeks, they're going to want to get out of scratch as soon as price comes back to break even. That's why inverse levels are so powerful. So that's kind of how I approach that. But H4 made it possible to have all that data so that I can go and analyze it, as opposed to spending years collecting all of that data on an individual basis and then building out the matrix for the same result. So a smart plug to them. And that's changed everything for me, because again, I don't take responsibility of the bias now. I framework the bias obviously, but I've done the hard work in building the matrix to give me the decision that I want to know, so that I don't have to spend any brain power every day thinking, is it higher or lower? I'm just like, well, you know, if there's no clear bias, you stay away and you look at another asset.
Yeah. I was going to say, so that obviously is going to do wonders for like the mental element of trading, because you're kind of relying on a set, is it 5 years data?
Yeah.
That you've got?
So there's one report that I only get 3 years worth of data, which is the Asian range, but generally I only look at like a 5 year period, because I want to know different conditions and different cycles.
Yeah. So obviously having that 5 years of data, that is obviously going to take a lot of mental pressure off of you as the trader going into trades, because you know that this is all based on data of 5 years in the market, the probability of where this trade's going to go. So I can imagine something like that is like just like a weight off your shoulders of like the whole mental element of trading.
I only have to care about where I get in and where I get out, which is relatively easy when you've got your model in your head of what you look for and what you want to do. So it takes a load. I'm not going to say it takes all the pressure off, but I just go, trade's lost. Okay, well, I knew it was only a probability anyway. But when it's all discretionary based and you've chosen the bias, you frameworked everything, you still, what did I do wrong? How did I get that so wrong? Whereas when you go, well, I knew there was a 30% chance that the day wasn't going to end green, because a lot of the data spits out to me is whether the D1 candle is going to be green or red, basically.
Okay.
So it's not saying, is a trade going to work? It's me frameworking, is the daily candle going to be green or is it going to be red? Is the weekly candle going to be green or going to be red? And then that's when I look for my entry. So, but if it doesn't, let's say all the indicators, or I don't want to say indicators, all the data points are signifying to me or signaling to me that there's going to be a bullish day and there's not, I go, well, it was wrong. It's fine. I knew there was a 40% chance that the daily was going to be red anyway, so it's cool. I knew it was going to happen. But if I'd have frameworked it all myself, I'd go, what do I need to improve on? Why was I wrong? I need to find it. And I think you chase tail because sometimes it is just a probability.
Yeah, 100%. So what do your charts look like now? Like obviously because you're trading based off of this data in this matrix, what do your charts look like now? Like, are you still marking up charts, or like what do they look like now?
Yeah, of course. So I mark out the previous week high and low. That's kind of my range for the week, if you will. I do look for like key areas in the market, so key levels that are like 110, 120 stuff. Key swing points on the higher time frames daily and weekly, and then I'll do the same with the daily time frame, previous day high, previous day low, and I update. First thing I do in the morning is update those levels because I want to know straight away, because often the Asian range will break the previous day high or low, and I need to know whether I need to act now or I need to act later on in New York. So I have to do that as soon as I get in the office. But my charts are still the same. There's just levels. And to the layman looking at my charts, I'd have no clue because half of the levels are like random session closing time saying, there's a 70% chance this is going to be hit or something. But to me, it means something. So it's just like a load of random sort of like horizontal lines on the chart.
It's crazy because I've never heard of this type of way of trading. Obviously, we speak to a lot of like prop traders, or recently we've had like more institutional traders. I feel like this is like a whole element of trading in itself and a whole kind of strategy in itself, if you want to call it that. It's really interesting on how, obviously we all know that the market is based off of years and years of data, but to actually hear the way that you speak about it and break it down, it's like something that not even just us doing this podcast, not something that we haven't heard of, it's something that I haven't heard of throughout the entire industry. And I've been in this industry for 9 years. Like hearing something like this is like kind of like groundbreaking.
Make you feel special?
No, but it is. It is like, because it is, obviously you've got a get edge for, but it is like a complete different edge that I don't think number one anyone else has, and number two you can't be replicated.
Like, are you a technical guy? Are you a macro guy? What are you?
Yeah.
Do you know what I mean? Like,
it's just I'm a data guy.
Literally.
But the thing is, my entries are still technical.
Yeah.
But I think humans look for the logic in everything. Trading aside, humans look for logic in everything. That's why, when you're trying to think of something and you can't quite get it and it racks your brain all day, it's because you're looking for the logic. Why did that happen? How did it happen? For me, data answers that, even though it tells me that it only happens 60% of the time. It tells me logically over the past 5 years, it does happen.
Yeah.
Whereas like, what pains me more than anything is when somebody's like, it's a high probability setup. And I'm like, okay, how is it high probability? I've seen it happen and this, and I'm like, so where's the high probability? Are you just telling me? Have you got anything to back that up? How do you know this happens? For example, I'll give you another example of a data metric that I track. Again, this comes from Tom. He's tracked it for years and years and years. And it's the opening price of euro dollar on a Sunday, how likely it's going to get hit on Tuesday, Wednesday, Thursday, Friday. We don't do Monday because it might open and then trickle about and then move. And it's something like a 78% chance over the past year and a half that euro dollar's weekly opening price gets hit. Out of that, it's a ridiculously high chance it happens on a Tuesday. Now, if you go on your charts now and you start plotting that weekly open line, tell me how many times it hits on a Tuesday. But people don't know this, right?
But see, even before you just told me about the data that you've collected today, you told me about this last year. Like, I can't even remember what it was, but like, you knew
We had many a
the
conversations
probability
about
of something happening on a Tuesday and something happening on a Wednesday. I was like, whoa. Like,
That was when I was
how do
marking
you
out the
know?
highs and lows of the week as well. Wasn't it? Yeah. It's just, I find comfort in knowing there is an actual edge rather than somebody just telling me something's going to happen. And that's so easy to, I mean, I've got probably almost 2 years worth of data. It takes me, in 10 minutes, I can probably get 5-6 weeks worth of data done.
Crazy.
You move the line, what day did it hit? Mark it down. Okay, move the line, what day did it hit? Mark it down. And what that does is, like, on a Tuesday, I can come in, regardless of any technicals, where we are in the market, I can go, there's a 78% chance today that we're actually going to hit Eurodollar's weekly opening price, so I might just sell it at market. But then somebody might be looking at it with their discretionary approach going, and I'm not saying this is the fact, I'm just saying this is my opinion. But like, you might come in and go, oh, I'm going to buy Eurodollar today for whatever reason, you know, trend line, moving average, technicals, order block, whatever. And I might go, yeah, but there's only a 20% chance that your trade's going to work today because we know over the past 5 years that it goes down and hits the weekly opening price. Your stop is above that opening price, so 80% chance you're going to get taken out.
Yeah.
But if you don't know that, you don't know it.
Yeah.
And that's the, and I don't know, I feel like I could rant on about this for ages, but people put a lot of trust in other people and they take everybody at their word. I don't do that. I can't do it because I have like a tinfoil hat where I question everybody. I can't take somebody's words, but when I've done it myself and I get the same data and the same results, I'm like, okay, that makes fact. It happened, you know, so that's a lot of what I do.
But honestly, I love it. Like, I think like I said, like, it's just something that like I have never heard of. Obviously, when I talk to you about different elements
we used to have rows all the time about journaling, didn't we? Because I used to tell you need to journal.
Back up my podcast, how many times I have said,
yeah,
and you'll have heard me said as well, I did not start journaling until Kieran sat me down one day and said, Mad, you're a fucking good trader, but what the fuck are you doing?
Yeah.
And I remember that conversation.
Well, I always say, how are you going to improve something if you're not tracking it? Like, if you're not, you're just throwing shit at a wall and hoping it sticks, right? Because you don't know where you're going wrong. You don't know where you're going right as well. You don't know what you need to fix. You know, so you've got to track everything. For example, you might find on a Friday you trade awful because you went out on a Thursday night, for example. Do you know what I mean? And you might find a pattern in that, but you're only going to know if you track it. Yeah. You know, so yeah.
Yeah, it makes sense.
The journal, Mads.
Literally, every single
journal.
Interview.
Journal.
Everything.
Journal your life. Every single interview or podcast I've done where we talk about journaling, I think even in like content I've done, reels I've done, I'm like, my friend Kieran, I didn't journal, but my friend Kieran sat me down and was like, Mads, you need to start journaling.
Do you review your journal now? Because that's the second step. You've got the login and then you've got...
Yeah, I think, I'll be honest, I usually review it when I f***ed up, which I think realistically I should be reviewing it more often, but if I f***ed up, I'm like, right, okay, let me go back.
Yeah, you just got to analyse how you performed this week, what you did well, what you didn't do well. Again, it's finding patterns in behaviour, like, you know, and you're only going to know that if you're actually committing to it. I mean, I use mine like a Bible. I'm probably a bit of a nerd.
It's fine.
I need to know how I'm performing and when I'm performing best. Otherwise, like I say, you're throwing shit at a wall and hoping some sticks.
100%. But it's also refreshing to hear because we don't ever talk to traders who talk about the element of journaling and how important it is to have this data. All we really talk to is just traders that just trade a strategy and don't really have anything to back it up with. It's just experience, I guess, or discretion on what they think is going to happen. So for you actually having all of the data that backs up every decision that you make and the fact you journal it, so you then not only have the data of the basis of why you placed the trade, but then you also have the journaling data of what worked, what didn't. I think that just gives you an edge that, like I say, no one has. Like, that is very rare to have in this industry.
Yeah, it's completely unique. Which I think everybody should do. I mean, you haven't got to go with a data approach. You haven't got to do anything that I say, but you need to do something that's unique to you. Stop idolising people who, you know, are in a completely different situation, because when push comes to shove, they're not going to save you.
Yeah.
When you're trying to decide whether you should get into a trade or get out of a trade, you can't just ring up your favourite influencer or, you know, ICT and say, should I take this trade? Like, you've got to ultimately decide that for yourself. And But if you're constantly building everything based on somebody else's career, you're never going to be able to detach and let go. Don't get me wrong, I still do things that I've been taught by various mentors, but I make everything my own and I fit it into my own plan, just so that I have the freedom and flexibility to, when something doesn't work, I can go, well, I need to adapt it this way, rather than going, Tom,
shit, what are you doing?
Can I disturb you for 5 minutes? Or Mark, can I ask you what should we do here?
Yeah.
I need to be able to have the autonomy to be like, actually, that's not working now. I need to go and change it.
Yeah,
but you only get that when you build something yourself.
Yeah, and we spoke about this on the way here, didn't we?
Yeah.
Like, it's great having that mentor to kind of teach you how to trade, but then when market conditions change, which they do, like, there's no one strategy that you can trade all throughout the year, all through a period of 5 years. The market changes. We've got seasonality, elections, summer markets, winter markets. There's so many different changes that happen in the market. So if you're relying on this like one strategy that one mentor has taught you, it's going to come to a point where that doesn't really work anymore. So the strategy in itself will work, but you have to kind of change your approach to how you're using the strategy, which I think that's where the element of like discretion and all of those things can't come in, but you have to make it your own, because when the market changes, you have to know how to adapt to it. Like you say, you can't just bring someone and say, what have you changed? Like, how are we doing it now?
Yeah. You're like a limpet then, you just like,
exactly.
carry it,
You're not going to have that autonomy of being able to do it yourself. So I think it makes absolute sense, and obviously you having the data to back it up as well. Like, but moving on to you as a trader.
Oh God.
Which I know you have some stories. What has been, so we'll do two elements. What has been like your worst trade of your career and your best trade of your career? Or not even trade, just like best moments and worst moments of your career.
The worst trade of my career sticks in my head big time. And I mean, it wasn't detrimental, it wasn't career ending or nothing, but it just sticks out to me because I was on holiday at the time. So I shouldn't have been trading. But this is going back I think it was before my little girl was born, so it was probably 4 years ago. And we was on holiday, and I mean, I was quite early into my journey, it was like probably a year in. And I come down in the morning, I set up my laptop, and I was like, right, I'm going to get loads of work done before everyone's awake. I'm going to kill the market today, I'm going to go out and get back. And because I was in Cornwall, the signal was pretty shit. So I was like, I'm not going to check my phone the whole time I'm out. When I get back, TP done, boom. And I traded gold. And because I was rushing, I accidentally put 10 times the size on. And this was a personal account with a decent amount of capital in there. And I put 10 times the size on. And I didn't check my phone until I got back, and I opened up trading view, I was like, oh shit, we hit stop, okay. I checked my phone, I was like, whoa, what on earth? And it had wiped out big time. It was on news, so there was slippage, and I was like, what happened? Like, I had no words, and I remember it stuck to me, because I was like, I couldn't find what I'd done wrong, and then I realised it was gold and the lot size is calculated differently. Ooh. So I'd put 10 times the risk on. And yeah, that wasn't a fun trade. So that's my worst trade. Just the way it made me feel, it was horrible. Because it felt like I was saying earlier, I was being pulled back down the scale. So I had, the goal of whatever the goal was, 100k, million, whatever. And that loss was like a big hit. Been building up slowly, boom. And you're like, oh my God, that's a harsh reality.
Yeah.
In terms of best trades, it's going to sound like a bit of a cop-out, but I try not to let my winners sink into them. I don't get euphoric over my winners because to me, again, the data helps, but I'm just like, it's like a cause and effect relationship. I take a trade based on this and the outcome is the outcome. But one of my better trades was recently I pyramided into a dollar CAD short. Like I was saying earlier in the car, I'd frameworked this idea based on the fact that dollar CAD had, over the past 5 years, it had 8 bullish days in a row. And we were currently trading on the 7th or the 8th. So I started to get an idea of thinking, okay, well, this is probably going to tank because over the past 5 years, we've, realistically reaching where we've been. There was a swing point. I started to get into a short, kept pushing, ended up pushing 10 days and I managed to cling on, and I just added size. And then I think it was the 10th day, we had one big red candle and I basically caught the whole move of that exited all positions. They all ended up in profit somehow. And then after that, the streak reset. So I was saying to Mads earlier when we was talking about it, that specific data set was about a green daily streak. As soon as the red candle come, that streak had gone. So the trade was no longer valid. So I had to come out really. But that was like when I come out, again, I was on holiday. So I entered on the day I went away, and we was away for 4 or 5 days, and I was in it the whole time. And it was the last day, I think, before we come back, or the day we come back, and I actually come out and I was like, I've been stressing about this the whole time, and now I'm finally out, but the holiday's gone, you know.
Yeah.
But it was a huge sigh of relief because the trade was a good winner.
Do you feel like, so going back to the loss, do you feel like in some ways that was needed? No. Because
No.
I feel like for me, anytime I've had like a major loss, I'm like, I needed that to either like humble myself or learn some type of lesson. Do you feel like that was in any way like helpful, should I say?
I think it showed me the reality of rushing and you know the consequence that you can have, but I don't think it wasn't like I didn't need to learn the lesson, if that makes sense. Like, I mean, I guess I did, but
you haven't done it again.
I never rush. I always check my size, but it wasn't like, yeah, I don't know. Maybe I did need the lesson.
Yeah,
Was it
that
that
you did.
first year of like, oh, I need to grind, non-stop,
Yeah.
trade every day?
Yeah.
Was that?
Yeah.
Okay, so
Yeah.
that's another lesson that needs to be learned by everyone.
Yeah. Well,
You need days off.
you sort of think, again, I go back to that scale, you think, you know, sitting stagnant, people generally think is bad. You know, I'm not making progress, I'm not moving forward. Especially when you go onto Twitter or Instagram and you see, oh, this person's just bought a new car, oh, that person's just made a payout, or that person's doing this. And you're like, but I haven't done anything today. But actually, doing nothing is like a position in itself. I mean, they say no position is a position, but it's kind of the same with what you're doing. You know, just because you haven't taken a trade doesn't mean you can't work on your trade, doesn't mean you can't gather stats, doesn't mean you can't backtest, do whatever. But that's something really tough people have to overcome is the fact you don't have to trade to trade.
Yeah, 100%. And I think even me recently, that's only been something that I would say this year I've really realised. And I don't know if it's because this has probably just been the busiest year of my life where I'm just doing so many different things. But I now take more of an approach of like, right, if my setup's not there, then I'm not going to force it. Whereas previously, I wanted to be in a trade any day. Like any day that I'm on the charts, I want to be in a trade. I think a lot of traders do this as well, because most traders are full-time traders now, especially like now we have the prop industry. People can become full-time traders a lot quicker.
And they get that confused as well, the full-time
thing. And I think that is really important. So now, like, I am a huge advocate for, like, make yourself be busy, because I think the busier that you are in your life, and this may be, some people may want to lynch me for this, but I think the busier that you can be within your day-to-day life somewhat takes pressure off of your trading, because the last couple of weeks, for example, have been probably my best trading weeks, and it has also been the busiest, most stressful weeks of my life. But trading hasn't been stressful because I've been so busy in other areas. I've only taken trades that make absolute sense. I've managed my risk correctly, which all hail me for doing that.
First time for everything.
The first time for everything. I've managed my risk in a way that I probably never have before. Like, I have gone onto that FX calculator and worked out my position size. Sam, if you're watching, I want a round of applause. Thank you very much. But it's been the least stressful moment of my life. And I think it is, like, I will put it down to the fact I've just been so busy. So I don't have time to chart watch. I have to manage my risk correctly, set a stop loss, which again, not something that I am used to, but the level of stress that it's taken off of my trading is crazy. But I think if I weren't so busy, I probably wouldn't be doing that. But most people really want to be full-time traders, not understanding that you don't need to be on the charts the whole day. Go out, touch grass, do something, start a business, like do something else, stay in your job for example, like I just think, yeah,
Which is a cheat code in itself, and people take for granted.
Yeah. But the whole narrative is people just want to be full-time traders and just live their best life, do whatever the hell they want every day. But I think that is more stressful.
That I couldn't tell you anybody, or very, very, very few people who trade full-time and only trade full-time. And I mean, don't have a course, don't sell a mentorship, don't have a job, you know, don't work in a professional environment, i.e. trade at a desk or a fund. That to me is full-time trading, but it's still a job. Like, I'm talking retail trader sat in his pants trading from his, you know, bedroom. I don't know anybody who does that and doesn't do anything else. Or I don't know anybody successful who does that. I did it for a period of time, and it was the worst thing in the world.
It's horrible. It is horrible because you've got nothing to do, so you will constantly be on the charts looking for something because you want something to do. And I think as well, you kind of want that thrill of like being in the trade. So it's kind of like a dopamine hit. You place that trade and it's like it's like, oh, like I feel something. Whereas 9 times out of 10 as a trader, we're not feeling anything because we're not doing anything. But just kind of keeping yourself busy, I think like I say for myself, I've realised over the last few weeks that works wonders for my trading, which I think is like complete opposite to what the narrative is online.
You want to escape the 9 to 5, you want to get financially free, which is weird because it's not financial free. Oh my
gosh. So did you see my tweet the other day about financial street? What's your stance on this? Okay, so for everyone watching at home, I tweeted that trading will never make you financially free, and the people came for me. Like, they were on my
she's trying to get him to come for me now.
I know.
She's
Back
literally
me here. But when I think of financial freedom, and under the definition of financial freedom, it literally means that you can wake up every single day and never have to worry about working, doing anything. Trading can't give you that. You have to wake up, look at the chart, make a decision, press some buttons in order to be able to make your money. You can never just go and live on a beach somewhere and just keep getting paid passively through trading. So what do you think about trading providing financial freedom?
I don't give a shit what people are going to say. I completely agree with you. I don't think it will never. I mean, there's certain instances, right? If you was a carry trader for years, yes, you might have got paid interest from the yen. Like, there's certain instances. If you invest into, you know, dividend-paying stocks, probably going to get passive income. But in terms of like not having to lift a finger, no. But I think people mistake what you say, and people are like, oh yeah, but I can log on to TradingView within 15 minutes and have placed a trade and then I let it run. Technically, that's not financial freedom.
Yeah.
And what happens when you're in drawdown, you've got to work yourself out of it. So it's people don't like being told that what they've been doing isn't leading towards their ultimate goal.
Yeah.
You know, but even so, what are you going to do when you're financially free? Are you going to stop working? You're going to go and sit on the beach? Or what's the problem with still trading?
Yeah.
You know, but it's not going to give you financial freedom.
Yeah.
And it's also, I also think financial freedom is freedom of stress. And
that is the
believe
point.
me, trading's never going to do that for you.
Never. Because like I say, when I think of financial freedom, I think of like waking up on a beach every day, living your best life without no worries in the world. All your bills are paid. You don't have to worry about anything. Trading can't give you that unless you, like, I don't know, pay your rent and all your bills for the next 70 years in advance. Then cool, but who's really
The only way it can is if it makes you enough money to retire and then stop working, because that's what financial freedom is.
Yeah.
It might make you financially affluent, and
you're still not free, because there could be something that happens in life that you have to use a good chunk of that money that you've retired with. So now you don't have as much money to last as long as you thought it would.
And also, financial freedom is different for everybody. For you, it might be $1,000 a month. For me, it might be 10 grand a month. And so it's how do you get that coming in without having to lift a finger. That is financial freedom, but people will get butthurt anyway.
I know, everyone was coming from it, and I think everyone must do it, like, saying it in a way of, like, kind of like defending trading. Yeah. And I'm like, whoa, like, I'm a trader too.
You're ruining the dreams, that's why.
But it's hustle culture, isn't it?
Yeah.
At the end of the day. And that's how people come into this industry. It's like everyone has this. It's like you watch 2 Andrew Tate videos.
Oh, God.
Yeah.
It's the hustle culture.
Yeah.
That's what drives like a new person to become a trader. Like, oh my God, no, I'm not listening to you.
Yeah.
And it's always the younger traders. And nothing against them, but like you say, it's that hustle. Oh my God, what's this bitch telling me I can't do this for? So, you know, and then they go on the attack, not realising they're wasting time and you don't care.
Like, I don't
Go and work on your edge, get some data, man.
Do you know what I mean?
Bore off.
Do something. Why are you coming for me? Like, go and look. The amount of times I had to just copy and paste the definition of financial freedom, I was like, are you people stupid? Like, I don't understand. Because when I think of financial freedom, I think residual. Like, you're getting paid regardless of whatever you decide to do today. If you own a business and you have employees working for you, then that can be somewhat financial freedom. But that's what I was going to say. There's some element of it where you can put yourself into a position where you can create a residual income without doing anything on the business. But that's going to take many, many years. And there's only a few things in life that actually provide residual income.
You could learn or get it done for you, but you could code an EA, an algorithm. That's realistically the only way I would see.
For trading.
You know, because, again, you know, if you slept in till 10 o'clock and you missed London session and you only trade in London, you can't take a trade. So that has stopped you. It's not financial freedom, because you have to get up and do the actions. If you had an EA that was doing it for you, arguably you do have financial freedom, but you're still going to have to actively work to maintain and
That's what I was going to say. Even with that, because we know that algos will only work to a certain point, because again, market conditions change, seasonality and all that kind of thing. The settings on the EA will need to be adapted and changed every now and then.
I do think though, anything that's residual income based, you know, property stuff, that still needs, like, financial freedom is freedom until it's not. Because, you know, what happens when your tenant trashes your place or your fridge breaks or something, you've got to go in and fix it. So even that sort of financial freedom, there's always going to be
something.
Work or maintenance. The only thing is if you like write a book or something, right? And you get...
I was going to say
like,
that.
Royalties. So Kieran, I mean, you've been trading for what, 5 years now? And so what is the end goal for you in terms of, where would you see yourself in 10 years, say?
I don't know. And the reason I say I don't know is because I'm always thinking of new ideas. So like, I love trading, but I love business way more. I love building a business, even if it's like I have part in somebody else's business and just getting it from like concept to out there. That's why I advise other people's investment firms and stuff, because I love seeing people grow. And for me as well, I love seeing my own businesses grow. So whether I'm going to be trading or not in 10, 15 years, I just honestly don't know. I'll do it until I get completely bored of it, but believe me, it's not the most exciting thing in the world. It's just, to me now at this point, it's just clicking a button and seeing if you get paid, you know. But business gives me a sense of, and when I say business, I mean having an idea, even if it fails, and just trying to get that concept out to people. I love speaking to investors. I love building relationships with clients. I love all that sort of networking stuff and, you know, branding, development, and, you know, all that kind of stuff. So I think if I had to tell you where I was going to be in 10 years' time, it's probably just trading a little bit on the side, but I'll definitely have my investment firm because that's something that I really want to push out there. Not in terms of like, I want to get everybody as a client, but I really want to grow it and help other investment firms and connect with hedge funds. I've had a few offers of kind of things that people want me involved in the future, which I can't really say too much on because of NDAs and stuff, but it's stuff still in the industry, you know, helping build out companies and whatnot. So to be honest with you, I don't really know, but I don't think I'll be trading until I'm, you know, dead.
But do you want to like give up that skill set you've gained from trading? Because it's working for you, right?
Yes, but
how do you give that up though? That's the
I
thing.
think you get to a point where you go, is the money worth it? For example, if my business all fails and nothing's paying me, I wouldn't give it up because obviously that's how I would make my income. But if the businesses and work that I do are thriving, even if it means taking a huge hit financially, I'm all right with that. I'm a dad to two. I want the best life for me and my kids. I don't care about the money. I care about being paid, having a warm house and food on the table, but you know, I would sacrifice money to have more time with them as they grow up. So, you know, yes, it'd be sad to sacrifice it, but it'd also give me, at that point, it would be 20 years of my life, you know, 15, 20 years of my life, and it would have got me through that. And I always say to people, if you told me tomorrow that the FCA cranked regulation up and no one in the UK could trade, I'd be happy because I saw my kids born and I was at home with them. That's all I can ask for. So future, don't really know, don't really care, to be honest, is my honest answer. I'll find opportunities, and I'm sure I'll trade until something takes over it, but...
Nice. Exciting.
That's probably a shitty answer to your question.
No.
You wanted. I'm going to be trading with 10 million. I'm going to be doing, but I don't know.
No, that's good though. I mean, priorities in life are different. I suppose.
Yeah.
It's like you've got kids, of course. Because when you first started trading, did you have kids?
Nope.
And of course, now that you have children, the same with you, right?
Yeah.
You've got kids
Yeah.
as well. It's like now your focus is family. Very impressive.
Like I said, I feel like we probably will have to do a part 2 at some point, because I feel like literally we haven't seen each other for like what, 6 months?
6
probably.
months-ish, yeah.
And the amount of things that we've had to catch up on is insane. So I feel like you say, you do so many things, like you're involved in so many different elements of different businesses, your own businesses. There were so many things that we can talk about, there's so many different topics that we could do. So I'm excited to see what we come back with in like 6 months' time when we bring you back for another episode.
Yeah.
I'll have given up trading.
Is Kieran still trading?
I'll be gone. People are prepared for some flack for that, because people ain't going to want to hear that I've said that. I'm telling you.
It's real shit, though.
People will be working towards their goals. They'll be like, I've got an equity edge account. I want to get 100k funded. I've spent 2 years trying to learn this. And then for me to sit here and be like 5 years deep and go, I don't know if I'm going to be trading in 10 years' time, people would get butthurt. I'm sure I'm going to have to turn my socials off for
But it's the reality, and I think it is a true journey of a trader and someone in business, because trading shouldn't be the end goal, I don't feel like. Like we say, you always have to have some element of stress when it comes to trading. And I think if you don't love trading, it's not something that you're going to want to do forever, full time. You're going to want to pivot into building a business, or just, I don't know, doing some kind of side hustle, or...
Selling a course.
Not doing that, hopefully. Unless it's a good one, which probably not. But... it is the reality of a journey, and even just as a human being, yes, we come into trading, and most of us come into trading very young and very naive. I think once you start networking within the industry, you realise that there's a lot, it's a bigger picture than just trading. So yeah, I think it's just the reality. Like, I don't think, and no one should come for you just because you might not want to trade in the next 5 years. Like, who cares?
Oh, fun.
That's your journey, do you know what I mean? Like, that's your business. But no, I knew this conversation would be golden, and I feel like we could probably just continue talking for hours and hours and hours. But thank you so much for coming on today.
That's a pleasure. Thank you for inviting me. Appreciate it.
And as always, guys, thank you for watching, and make sure you come back next week for another episode of Trader Talk.